Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MACOM Technology Solutions Holdings, Inc. quarterly report. MACOM Technology Solutions Holdings, Inc. offers a wide range of businesses and services that cater to various industries. The company provides analog semiconductor solutions for wireless and wireline applications across the RF, microwave, millimeter wave, and light wave spectrum. The company's portfolio includes standard and custom devices such as integrated circuits, multi-chip modules, diodes, amplifiers, switches and switch limiters, passive and active components, and subsystems. These products are used in various electronic systems including wireless base stations, optical networks, radar and medical systems, satellite networks, and test and measurement applications. MACOM serves multiple markets including carrier infrastructure, industrial and defense, and data centers. The company's products are sold through a variety of channels such as direct sales force, independent sales representatives, resellers, and distributors. With operations in the United States, China, Japan, Singapore, South Korea, Taiwan, and internationally, MACOM is a global provider of semiconductor solutions. The company's services cater to various industries including satellite communications, fiber-to-the-X/passive optical network, military and commercial radar, RF jammers, electronic countermeasures, communication data links, industrial, medical, test and measurement, and scientific applications. Overall, MACOM Technology Solutions Holdings, Inc. is a leading provider of analog semiconductor solutions for use in various wireless and wireline applications. The list of businesses and services provided by the company includes analog semiconductor solutions, integrated circuits, multi-chip modules, diodes, amplifiers, switches and switch limiters, passive and active component subsystems, carrier infrastructure solutions, industrial and defense solutions, data center solutions, satellite communications, services, fiber-to-the-X/passive optical network services, military and commercial radar systems, RF jammers and electronic countermeasures, communication, data links, test and measurement equipment. Scientific applications. Unfortunately, I don't have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to skyrocket. The stock price of MACOM Technology Solutions Holdings, Inc. has seen significant growth in the past year, leaving investors and analysts eager to understand the underlying factors driving this trend. Several key events and developments have likely contributed to this surge. Firstly, the company's strong financial performance, including revenue growth and profitability, has boosted investor confidence. Additionally, MACOM Technology Solutions' strategic acquisitions and partnerships have expanded its product offerings and market reach, increasing its competitiveness in the industry. The company's focus on innovation and research and development has also led to the introduction of new products and technologies, which are likely to drive future growth. Furthermore, changes in the global economy and technological landscape may have created a favorable environment for MACOM Technology Solutions' business model. For instance, the increasing demand for high-speed data transmission and 5G technology could be driving up demand for the company's products. Lastly, investor sentiment and market trends can also play a significant role in influencing stock prices. If investors are optimistic about the company's prospects, or if there is a broader trend of investing in technology stocks, this could contribute to the stock price increase. In summary, a combination of strong financial performance, strategic business moves, favorable industry trends, and investor sentiment have likely contributed to MACOM Technology Solutions Holdings, Inc.'s skyrocketing stock price over the past year. MACOM Technology Solutions Holdings, Inc. market capitalization of $17 billion is materially smaller than most of its industry peers of roughly $27 billion. MACOM Technology Solutions Holdings, Inc. trades at a higher price-to-earnings ratio of 104 times and a higher price-to-book ratio of 12.7 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. While the company is able to service its interest expenses from operating income, the presence of recurring special charges raises concerns about underlying earnings quality. Investors should monitor whether these charges reflect ongoing operational inefficiencies. The primary drivers of revenue growth and decline can be identified from the extracted summaries. On the growth side, several markets have contributed significantly to the increase in revenue. The industrial and defense market has seen a substantial growth of plus 20.6%, followed by the data center market with a plus 31.5% increase. The telecom market has also experienced a notable growth of plus 23.1%. Geographically, the United States and China have been major contributors, with revenue increases of plus 27.4% and plus 36.2%, respectively. The Asia-Pacific region, excluding China, has seen an impressive growth of plus 48.8%. Additionally, the acquisition of ENGINIC, Inc., for $14.4 million has also contributed to revenue growth. Furthermore, two key customers, Customer A and Customer C, have increased their revenue share by 2% and 1%, respectively. On the other hand, several factors have led to a decline in revenue. The decrease in revenue from cost of revenue due to a change in depreciation expense for fabrication-related machinery and equipment has been a significant contributor. Additionally, the loss on extinguishment of debt amounting to minus $88.5 million has also negatively impacted revenue. An increase in cost of revenue and operating expenses as a percentage of revenue have further contributed to the decline. Overall, these factors highlight the key drivers of revenue growth and decline, providing valuable insights into the company's performance. The company's financial performance underwent significant changes between 2025 and 2026. Notably, the net income shifted from a loss of minus $167,530 in 2025 to a profit of $48,767 in 2026, representing an improvement of plus $216,297. This turnaround is attributed to various factors not explicitly stated. The profit margins also underwent changes during this period. While the overall profit margin decreased from 53.7% in 2025 to 17.9% in 2026, there were increases in specific areas. The gross profit margin rose from 53.7% to 55.8%, and the operating income margin increased from 8% to 15.9%. These changes suggest that the company's revenue growth was a key driver of its improved financial performance. The revenue growth can be attributed to strong performances in specific markets, including industrial and defense, plus 20.9%, data center, plus 31.4%, and telecom, plus 22.9%. This expansion in these areas likely contributed to the company's improved net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the data, the company has consistently produced positive operating cash flow in both 2025 and 2026. In fact, the net cash provided by operating activities for these two periods were $66,659 and $42,925 respectively. This trend suggests that the company's business model is generating sufficient cash to cover its operational expenses, indicating a healthy financial position. The company's debt level has remained relatively stable over the past year. The long-term debt decreased slightly from $339,908 to $339,630 between January 2, 2026 and October 3, 2025. Additionally, the principal balance of the debt increased by a small margin from $160,665 to $161,100 $151 during this period. In terms of interest expenses, there has been an increase in recent years. The interest expense rose from $1,366 in January 2025 to $1,698 in January 2026. However, it's worth noting that the effective interest rate remained constant at 0.54% over this period. Furthermore, the total interest expense for the 2029 convertible notes increased significantly from less than $0.1 million in January 3, 2025, to $0.3 million in January 2, 2026. Overall, while there have been some fluctuations in debt level and interest expenses, they do not appear to be significant changes. The company's performance varied across different segments and regions. On the positive side, the industrial and defense segment saw a significant increase in revenue of $20,313, while the data center and telecom segments also experienced growth with increases of $20,470 and $12,707 respectively. In terms of geographic regions, China stood out as a top performer, with revenue increasing by $22,495. France also showed improvement, with revenue rising by $2,375 and net income turning from a loss to a profit. However, not all segments and regions fared well. The other countries segment saw a decline in revenue of $5,583, while the United States experienced only a modest increase in revenue of $26,564. Furthermore, the company's property and equipment in the United States decreased by $2,637. Management's outlook for the company is cautiously optimistic. They expect continued revenue growth driven by demand for high-performance semiconductors, innovation in new products, and leveraging their leadership position. However, they also anticipate weaker near-term demand due to macroeconomic and geopolitical conditions. To address these challenges, management plans to invest in research and development (R&D), which will not only drive product innovation but also generate tax credits. The company's strategy is focused on developing high-performance products that meet customers' technical needs in key markets such as I&D, data center, and telecom. In terms of financials, management believes that the company has sufficient cash reserves to meet working capital requirements for at least the next 12 months. However, they may need to raise additional capital through equity or debt securities if needed. This suggests a cautious approach to managing finances, prioritizing stability over aggressive growth. The company has made several significant transactions through its acquisitions and divestitures. In terms of acquisitions, the company has engaged in business combinations, acquiring tangible and intangible assets worth $12.5 million, net of cash acquired. Additionally, goodwill was recognized in these business combinations, indicating a substantial investment in new ventures. On the other hand, the report reveals that there have been no divestitures mentioned, suggesting that the company is focused on expanding its operations through acquisitions rather than selling off existing assets. This strategic approach may be aimed at driving growth and increasing market share. There are growing concerns among businesses and economists regarding the potential for inventory buildup and supply chain disruptions. Inventory buildup refers to a situation where companies accumulate excessive stockpiles of goods, leading to wasted resources and reduced efficiency. This can be caused by overproduction, poor demand forecasting, or inefficient logistics. Supply chain disruption, on the other hand, occurs when there is an interruption in the flow of goods from suppliers to manufacturers to consumers. This can be due to various factors such as natural disasters, transportation issues, or global events like pandemics. Both inventory buildup and supply chain disruptions can have significant economic consequences, including lost revenue, reduced competitiveness, and decreased customer satisfaction. To mitigate these risks, companies must adopt more agile and responsive strategies for managing their inventories and supply chains. This may involve investing in advanced technologies such as artificial intelligence and the Internet of Things, IoT, which can provide real-time visibility into inventory levels and supply chain performance. Additionally, businesses should prioritize building resilient relationships with suppliers and partners to ensure continuity of operations during times of disruption. Ultimately, addressing concerns about inventory buildup and supply chain disruptions requires a proactive and collaborative approach from all stakeholders involved in the production and distribution of goods. By working together and leveraging innovative solutions, companies can minimize the risks associated with these issues and maintain their competitiveness in an increasingly complex global economy. That concludes the financial summary for MACOM Technology Solutions Holdings, Inc. Feel free to comment below, and I will be happy to answer them when possible.